So let's start our solution. Okay, but before that I will make you clear some type of accounts that will be relevant for the current solution. Okay, so most prominently we have 5 type of accounts. However, we are explaining only 2 type of accounts relevant for the current solution. Assets are recoverable amounts. Let's say suppose we have sold laptops or computers to one of our customer, but the customer says that the amount will be paid off after a certain period of time, let's say 30 days. So that amount will become recoverable from those customers, so that will be considered as assets. Then okay, then again cash and bank balance. If the entity will receive the cash payment or online payment from the customers, so that cash balance and bank balance will also be considered as assets. Okay, good. This supplies. Okay, so expense, everyone will be familiar with the expenses. So let's say suppose we have electricity expenses. For the electricity consumed during the period, electricity expenses. Also, in addition to cash and bank, we have inventory also. What is the inventory? Or we can say supplies. What is the inventory? Let us suppose we are into process of selling packaged food. Okay, we are a very big manufacturing company producing packaged food for our customers, for our biggest biggest market of customers. Okay, now what happens when we process some material, we have to purchase raw material from our suppliers. So this is the raw material which we purchase from our suppliers. Okay, now in case of expenses, we have electricity expenses, telephone expenses, but make sure expenses business purpose only, not of personal purpose. Like it should not be, the case that the businessman is considering the expense of any party arranging in his house, or marriage ceremonies in the profit and loss statement of the business. That should not be the case in any case. Okay, however, these are the 2 types of accounts we will be considering for the current solution. Okay, but the third type of account is revenue. Fourth is liabilities, and fifth is capital. Revenue, everyone knows, sales. Like whenever we generate any amount from selling our goods or services to our customers, that will be known as revenue. Followed by that, liabilities. What are liabilities? Let's say we have amount payable to our suppliers, like we have not paid the amount for which we have purchased some goods. Okay, so that will become our liabilities. Capital are mostly equity share capital or preference share capital. However, these terms we will understand in later point in time, whenever we will face problems related to it. But capital, you can say, the financing part of the business, the financing where we will record every transaction related to fundraising for the company. Okay, so now we will also understand diamond rules of accounting, because without that we will not be able to derive the solution. However, the solution is straightforward for everyone who knows the diamond rules of accounting. So that's why I'm obliged to introduce, or I would be grateful to introduce diamond rules of accounting for you. So write it down. Please record this first sheet also as well as second sheet also. So let's have we if we will receive extra cash, or we will receive payments from our customers after a certain period of time for against the selling of the goods and services to them. Okay, so they will be in increase in asset. Okay, and when we will incur any expenses related to businesses, so there will be a debit to those expenses. Okay, it will be very certain that why these expenses or assets are being debited with any type of increase. Okay, so these are the traditional rules. You do not need to care about that why this logic behind, because it is a traditional way, so there is no science that why that happens. Okay, whereas similarly, increase in revenue, capital, liabilities equals to credit. Okay, decrease in revenue, capital, liabilities equals to debit. So these are the accounting rules we always have to remember. Okay, before proceeding with any type of question in the accounting subject. Now what the question asks from us, that which of the following given pairs of accounts will be impacted same. Okay, with the debit and credit. Like it is asking that which of the following pairs, like related to either asset or expenses, because in case of asset and expenses, if there will be increase in asset and expenses, then there will be a corresponding debit. For decrease in asset and expenses, there will be corresponding credit. Likewise in case of revenue, capital, liabilities also. Okay, so we have to recognize what which pair is qualified to be a choice. Okay, now in case of choice B, I'll make you more clear that why I choose to the choice B. Okay, choice B says supplies, or we can say inventory. And you know what is the meaning of inventory very well, which we have just discussed. Purchase raw material. It is just a raw material, that's all. Inventory is the raw material purchased from the supplier. However, I am writing the full statement so that you will get to remember these things whenever you will revise. Okay, I'm going to detail. Why that so? Because otherwise, what will happen? You will get the solution, but not the basis, not the logical method or detailed analysis that how we got to the solution. Okay, now, and what is this the next element? Electricity expense. So as I said, the inventories will be considered as assets. Why that so? Because we will process these inventory to make a product sellable to the customer. Okay, and as far as electricity expenses are concerned. Okay, so the consumption, so the consumption of power. Okay, sorry for the interruption. Let's resume. Consumption of power. Okay, now these are the assets, these are the expenses. Okay, now in the second sheet we have seen that for asset and expenses, for assets and expenses, there will be different treatment. Oh, they will be same treatment for increase in asset and expenses and decrease in asset and expenses. Okay, so now the correct choice, so we can derive our solution like, so both of these accounts will be impacted with the same magnitude in the same direction, not in the same magnitude. Magnitude refers to the amount. So let's do not make it complex. So the both of these accounts will be affected or will be impacted in the same direction, like increase and decrease, with the corresponding debit and credit. Okay, correct choice for problem 32 is B. Okay, please make sure that noted down this sheet you have noted down this sheet as part of your revision. Okay, along with that, please write this down to get a clear interpretation of the solution or of the main solution which we have derived. Okay, thank you.